Welcome back, traders. I'm Kagan, your daily trader and analyst.
And I'm Ben, your other daily trader and analyst. And what are we going to be talking about today, Kagan?
I believe we're going to be talking about techniques to use to validate POIs.
Absolutely. So today we're going to be talking about validating your POIs, right? A lot of people are asking me this question, Ben, I'm marking out the right POI and I keep getting stopped out.
Right.
Now, what I assume is happening to most people is that you'll have your POI, right? You'll see price come in, it'll start going in your direction. You're either moving your stops to break even, you're tightening your stop loss, and what happens is you're either getting hit BE or you're getting taken out on SL. And pretty much today, what we're going to be talking about is how to avoid these types of scenarios. Now, the first thing I do want to say before getting into the validation of POIs is that none of this is financial advice. And second of all, you have to understand that losses are going to happen in Forex over and over and over again. It is perfectly fine to lose 3-5 trades in a row because understanding that our RR is really good and trading with a good RR and risk management plan, overall in the long term, you will be profitable.
Very, very important right there. Look, the market's not perfect. That's that
Absolutely.
that's the biggest thing.
So Kagan, you got any questions for me on how to validate POIs?
I guess the first question I have for you, and I think a lot of people have, is do you use any, indicators to validate POIs?
Absolutely. So let's go ahead and just stick with diagrams for now before we go into any live examples. So yes, I do use some indicators. It doesn't have to be the indicator from liquidity inducement theorem. Although a lot of you see that I have this up, no, I did not receive this from REM. No, I did not receive this from the liquidity inducement theorem community. Someone else recreated the indicator and the settings are actually slightly different. Believe it or not, they are actually adjusted to my likings and how I trade personally. I do not trade the same as REM. I just want to make that clear. Neither was I in their boot camp. So yeah, the first thing you can do to validate a POI is simply, was there a divergence on an indicator like this within the POI? Now you can use, and I'm going to
Yeah, I'm
go
about to
ahead and
ask, which one would you recommend if not that one?
you can use the TDI, the RSI. Those are really the two main ones. As long as you have the TDI and RSI, you are going to be able to spot divergences in the market. So let me show you an example of like a divergence that would happen. Let's say the market was coming down, right, into your demand zone or your first POI, right? And we see that we had a reaction. Post reaction, right, we see that price came right back down and made a deviation like so. On our indicator down here, we need to see a divergence going in the opposite direction. Seeing that this is coming up and this is coming down now validates this POI, right? We had a sweep of liquidity, right, within the POI, right? We are assuming we have swept some other form of liquidity in the past, right? And now we have a divergence within our POI and a divergence on our indicator to tell us that this is now a valid POI. I cannot emphasize enough that divergences within POIs are extremely effective, right? And they'll even help you out with refining your entries within those POIs.
Mhm. Right. And so then going into actually more of that, you just, refining your entries and everything like that. I know a lot of people like to have POIs on, the minute, the 15, but then also, the 4 hour. So is there like a big difference between high time frame POIs and lower time frame POIs?
There is a huge difference between lower time frame POIs and high time frame POIs. Now, a lot of people see a high time frame POI and assume, oh my God, that stop loss is ginormous. I'm looking at like a plus 5 SL. That's a little bit too big for me. Now, even though a high time frame POI might have a really wide stop, at least the high time frame POI is going to give you the direction of the market. So say we come into the high time frame POI and we respected it, right? And we're now starting to make a bullish move. And let's say we just had to break a structure here. Say the market comes back down to retrace, we don't necessarily need to grab entries at the next 1 minute POI. However, what we can look for is 1 minute continuations, right? Post mitigation of the high time frame POI, right? So what I like to look for after a high time frame POI has been mitigated, and if you want to grab those refined entries, is start to find M1 order flow continuations on the M1, M5, or anything lower time frame, such as like kind of how we see here, right? Price has respected the high time frame POI. We have now created a new structure. We can now find established order flow on the 1 minute to find continuations post that high time frame POI. Now, can you still enter this on an instant entry? You can. It's all about your risk tolerance, right? If you are okay with taking entries with more than a 5 pip SL, that's generally okay. I am perfectly okay with taking a 10 to 15 pip stop loss. It fits my psychology. I am more concerned about finding the correct move rather than finding the refined entries. I know I can find these refined entries post mitigation of the high time frame POI.
So then my question is, how do you know whether to do an instant entry or, to look closer on the 1 minute, 5 minute, 3 minute?
Well, that all comes with understanding the validity of the POI. There are some other things that I look for besides divergences, right? And besides high time frame, low time frame bias, and besides indicators as well, right? So let's go ahead and go into our checklist here to talk about some of the things that I've already talked about, right? We know we can use a TDI for divergences. We know we can use an RSI for divergences, okay? We know we don't have to take an instant entry off the high time frame POI, but can find low time frame continuations from the high time frame POI. Right now, the next thing I want to talk about is engineered liquidity. All right, and understanding what engineered liquidity is, right? And this is where a lot of people will have or will go break even after there's a break of structure per se on the 15 minute once price comes into the 15 minute or 30 minute or hourly POI. So what engineered liquidity is when we go ahead and tap in to the POI, let's say that this is a 15 minute POI. Once it taps in, you will then start to see liquidity build up within this POI, and then it will shoot up. Now, what did this POI do, right? Well, it was now creating equal distant lows, equal distant lows, equal distant lows, right? Accumulating all of these buy orders within this POI. But what didn't happen here? We never had a sweep of this liquidity for price to go higher. So what can we assume, knowing that price has engineered liquidity and made this pop? Well, what's going to happen is price is either going to come down, tap you break even, right? Or it's just going to go a little bit below the POI and then rocket.
A little stop
right?
hunt. Right.
Exactly. So when you have a high time frame POI, make sure to mark in lower time frame order blocks that are directly right below this POI, especially if this POI is engineering liquidity, right? Once we have engineered this liquidity, make sure it stop hunts that liquidity. Now, let's say before engineering this liquidity, like let's say while this engineered liquidity and it had a stop hunt of that liquidity and price starts to just be lenient around this area here, it is perfectly fine to go ahead and start taking entries, right? Do you want to have your stops right below the 15-minute POI? No, I would remain them to be right below whatever lower time frame POI is resting, right below here.
So actually that brings up a good point. How far back can you actually take a valid POI? Because like that one might be right there, but then the one below it might be real far away. So how far can you actually go back?
So we talked about the TDI, I talked about the RSI, we talked about lower time frame continuations from the high time frame POI, we talked about engineering liquidity. Now we're going to talk about proximity of the POIs. In combination, time. A lot of people are constantly DMing me on Instagram, what are the correct timings? It's not knowing the correct timings, it's knowing how to use time as Confluence, right? With that being said, we have to, this is no secret. This is all over YouTube. You're not just going to find it here. There's no one teaching secrets per se. Everything is out there. You don't need to spend thousands of dollars on mentorship unless you really need the one-on-one help, right? If you're a very motivated trader and you are studying charts 4 or 8 hours a day like we once did, you will be fine. If you're someone that doesn't have the time to study charts like that, perhaps a mentorship program would be good for you.
Lead you in the right direction.
Exactly. Kind of tell you where you're going right and where you're going wrong, right? That way, when you're going back into trading, you understand what you did wrong rather than having to document months and months of knowing why something didn't work or did work, right?
Right.
So let's get back into proximity of POIs, right? Proximity of POIs not just has to do with timing as Confluence, but we also have to understand the daily cycle. Now, if you don't understand the daily cycle, go back into my previous videos and you'll see that I have a good explanation of how the daily cycle works. Now, I'm sorry for wasting time here. Let's go back into proximity of POIs, right? If a POI is within the same day, right? Within the same day, it has more validity than POIs that are going back from time and time before. The only way we take POIs that are, let's say, 3 days back, right? We need some sort of sweep of liquidity into this POI before it can go up, right? A lot of people are taught, here's the POI, that price should come down, kind of hesitate to touch the POI, build liquidity, right? And then stop hunt all that liquidity for price to make its real move, right? That's how most people are taught to trade these POIs. However, what is the proximity of this liquidity, right? Is this liquidity building all the way up here, or is it building closely to the POI? If we do not have a liquidity buildup that is very close to the POI, such as here, then it is less likely to work. For example, if our liquidity is up here, it is unlikely to tap this and run. It is actually more likely to tap this, go through it, and then run. Right. We really, really need to see, in terms of proximity of liquidity buildup, we need to see price come down, barely touch the POI. Now we know what? Price is doing what? We are building and inducing equal distant lows. We're inducing buying right here, right? So because of that, we need these equal distant lows to get taken out before the POI can actually run.
Got it.
Other than that, there are a couple more ways to validate POIs. If you want to know some of the other ways to validate POIs, definitely DM me on Instagram. Make sure to subscribe to this channel. We're going to have a couple more videos on how to validate. I just want to go over these specific concepts that we have gone over now in live examples, so these can be very well engraved in your head. There are numerous ways, a plethora of ways to validate these POIs. But for now, stick to these, back test it, and see how it works for you. Okay.
Very important right there. I want to rephrase that. Back test, back test, back test.
Back testing is super important. Now let's go into some live examples so I can kind of show you what I mean. Let's go ahead and just do the previous day. And like I said, I like to trade POIs within the session that have order flow, right? Order flow is very important for me, right? We are receiving order flow from here, right, to this POI right here, right? Now, a lot of people are like, oh, there's no imbalance here. This is very unlikely to work. Yes, a lot of the time your POIs should have an imbalance between here and here, and that's going to validate even more. So if you want to go ahead and jot that down too, if there is an imbalance between the third candle and the POI, then your POI is also to be more valid. Now let's go into the 1 minute to see how valid this POI is and why it worked. So here we see our POI is made. Here's the engineered liquidity. We can clearly see we had the stop on of the liquidity, but what else do we have? We have equal distant lows being created within this POI. We clearly see that we have swept those equal distant lows, which now tells me that this could be and will be our refinement for this POI. So we will not be taking positions unless price has come all the way down to this point. Now, am I going to be taking instant entries here? No. Am I going to be taking instant entries here? No. Am I going to be taking instant entries here? Absolutely. Now let's go through a bunch of other things and see what else we can do to validate this POI. Is there a divergence within this POI? Yes, there is. We can clearly see that there is a nice divergence happening here, right? So after this sweep of liquidity, if we really wanted a refined entry, we could theoretically pick up buy orders right around here, right? With an SL tight to around 1.5 pips. And you can see for my first target, I would have grabbed structure here at 1 to 15, right?
That's
and then
crazy.
our second target would probably be the top of Asian highs for a 1 to 25, right? And if we wanted to ride it out, wait for the sweep and take the opposite, we could have. Now
Right.
also, let's talk about timing of the POI, right? We can see that once price has left this POI, it did not have a clear liquidity buildup like I was talking about. Now, no, please note this down that when we are trading internal structure order blocks, we do not need a liquidity buildup. We simply just need to see where liquidity has built up and where it has been swept. Liquidity built up here, equal distant lows, swept. Here's our refinement. Liquidity build up here, we've clearly swept. We know we can start building. However, we have to trust our analysis and know that price is most likely to come to here for the buys to stay true.
Mhm.
Now we talked about lower time frame confirmations, right? And M1 order flow. Now here's that M1 order flow, right? We can simply see we can grab lower time frame refinements if we were to miss this entire move. Here we could have taken buys right here. I can see that we clearly have extremes building up here. We could have taken entries here. We could have taken entries here, right? Once price gets too far out from the POI, I would not look for M1 continuations. M1 continuations are only good when we are close and coming out of this type of POI, right? I also
Right.
have an indicator here that reads price delivery, but if you want to learn how to do that, that is something you got to DM us about. We're not going to go ahead and leak some of our strategies that we use personally, because that would be unfair. We've been working on this craft now for 10 years, and the last thing we want is for someone to take all our work after all our hard work for 10 years and for them just to use it for themselves, and if not, resell it for themselves too.
Yeah.
But with that being said, we hope you have a better understanding now of how to kind of validate POIs. We hope you understand how to use the TDI, how to use the RSI, how to draw in correct POIs by understanding where the imbalance is, how to understand where the liquidity sweeps are by understanding where the engineered liquidity is, right? Understanding the proximity of POIs and the proximity of time and price is extremely important. Backtest this. I would love to see your results. All right. If you guys have great backtesting results, please send them to me on Instagram, and I'd love to look them over, and I'd be happy to tell you if you are right or wrong.
Great.
With that being said, happy trading, everyone.
Happy trading.